Hello, everyone, and welcome back to Tech Podcast's Dev Technosis. I'm your host, Yash, and today we're diving deep into a crucial area of finance where technology is not just an add-on, but a game changer. Artificial intelligence in FinTech, specifically in the realms of risk management and fraud detection. To guide us through this evolving landscape, I'm joined by Olivia, a financial technology analyst and AI implementation strategist who's worked with global banks and rising fintech startups on integrating intelligent systems into their risk protocols. Olivia, welcome to the show.
Thank you, Yash. I'm excited to be here. AI in finance is one of the most powerful transformations we're seeing, especially when it comes to securing systems and staying ahead of financial threats.
Let's begin with a broad perspective. Why is AI becoming so essential in fintech, particularly for risk and fraud?
It comes down to scale, speed, and complexity. Financial systems handle billions of transactions daily. Traditional risk models, which rely on static rules and manual monitoring, just can't keep up. AI brings the ability to analyze vast datasets in real time, detect patterns humans might miss, and adapt to new threats as they evolve. It's dynamic, it learns continuously, and it reduces both false positives and overlooked anomalies. In simple terms, AI helps financial institutions spot trouble before it causes damage.
That's powerful. So let's break it into parts. What does AI-powered risk management look like in today's fintech world? Great question. Risk management is about identifying potential losses before they happen. Credit defaults, market crashes, liquidity shortages. AI can model these risks with much greater accuracy by analyzing historic data, current trends, and behavioral signals. For example, in lending, AI can assess a borrower's creditworthiness not just by credit score, but by evaluating their spending behavior, repayment patterns, and even social data, if permitted. It can predict loan defaults more reliably than traditional underwriting methods. In trading, AI algorithms monitor market sentiment, global news, and economic indicators to forecast volatility and recommend hedging strategies. These models get smarter with time, adapting to new market conditions as they unfold. So AI is helping institutions avoid bad bets and maintain financial stability.
Exactly. It's proactive risk detection. Rather than reacting to a crisis, you're forecasting and preparing for it. This predictive capability is what makes AI such a valuable asset.
Let's now shift to fraud detection, an area that affects not just institutions, but also millions of customers directly. How is AI helping here?
Fraud is becoming more sophisticated every day. Phishing, identity theft, card fraud, synthetic accounts. The attack surface is huge. AI systems are designed to look for anomalies in real time. If your card is suddenly used in a different country or a large transaction is attempted at an unusual hour, AI can flag that instantly. But it's not just location-based logic. Modern AI models look at behavior patterns, how you type, how fast you navigate, your transaction timing. If someone mimics your account but behaves differently, the system can detect that within seconds. And the best part is that AI reduces false alarms. It learns from each case, so it gets better at separating genuine activity from actual threats.
That's interesting. So, in a way, AI builds a behavioral fingerprint for each user?
Exactly. This is often called behavioral biometrics, and when combined with device recognition, geolocation, and spending habits, it creates a robust fraud prevention framework. AI also helps in identifying fraud rings. Organized groups exploiting multiple accounts or platforms. These are hard to detect manually because they operate across time zones and identities. AI can piece together those scattered clues.
And how are fintech companies integrating this tech? Are we talking about off-the-shelf models, or do they build their own systems?
It depends on the scale. Large institutions often work with AI development teams, like Dev Technosis, to build customized fraud detection engines tailored to their users, risk appetite, and regulations. Smaller companies might use API-based solutions or platforms offering fraud detection as a service. Either way, the key is to integrate these models into core workflows, onboarding, transaction monitoring, customer service. It's also vital to have explainable AI. Regulators want to know why a transaction was flagged or why a loan was denied. So it's not just about prediction, it's about transparency and compliance.
You mentioned regulations. How does AI meet financial compliance requirements?
That's an important point. In most regions, financial AI systems must be auditable. That means logging decisions, showing how models were trained, and ensuring no discrimination in outcomes. AI tools must comply with laws like GDPR, PCI DSS, and anti-money laundering standards. In the EU, there's growing regulation around AI ethics, ensuring fairness, accountability, and data protection. So companies need development partners who not only understand the tech, but the legal framework too.
That's where firms like DevTechnosis come in, right?
Exactly. They build AI solutions for fintechs that are not just smart, but secure, scalable, and regulatory ready. It's that full stack thinking that makes a real difference in implementation.
Let's talk future. What's coming next in AI-based risk and fraud management?
I see three big trends. First, the rise of real-time AI. Models that process and act on data within milliseconds, especially for instant payments and digital wallets. Second, collaborative intelligence. Banks and fintechs will increasingly share anonymized threat data to help train better fraud models across the industry. And third, AI plus blockchain. These two together can provide end-to-end traceability for transactions and improve the trustworthiness of records. We'll also see more use of AI in identity verification, using facial recognition, liveness detection, and document scanning to stop fraud before it starts.
That's an exciting and secure future.
It is. AI gives us a chance to not just fight fraud better, but to build systems that are more inclusive, fair, and adaptive to the financial world's ever-changing risks.
Olivia, this has been such an informative session. Thanks so much for breaking it all down for us.
My pleasure, Yash. Always happy to talk about building safer, smarter financial systems.
And to our listeners, if you're in fintech, banking, or payments and looking to integrate advanced AI solutions for risk or fraud, check out devtechnosis.com. From custom AI development to regulatory compliant platforms, they've got the expertise to take your product to the next level. Thanks for tuning in to Tech Podcast's Dev Technosis. I'm Yash. Until next time, stay secure, stay smart, and keep innovating with intelligence.